We will circulate a copy of the recording and the slides by email late next week. We are also adding in a copy of the slides to the chat now for anyone that wants to have a look at them as we go along. I'm not expecting any fire alarms where I am, but please do keep an ear out for them where you are. Also, this is a safe space, so we just ask that you respect each other. Finally, you can add any comments and reflections around the things that you hear today in the chat, but we do ask that you use the Q&A function to ask any questions. You can also use that to upvote any questions, and we will leave time for questions at the end. Whilst we do encourage you to submit your questions using the Q&A function, if you do need to ask your question verbally, you can raise your virtual hand in the last session by using the reactions button. But please do wait until the designated time to do that. So just a quick introduction from myself. I'm Frankie and I'll be chairing today's session. I'm also joined by my colleagues Josie and Chanel, who will be helping with things like sharing slides, running the polls, keeping an eye on the chat and helping with the Q&A and fireside chat later on. So just a quick look at the session and how it will run this afternoon. We're nearly through the welcome and housekeeping, you'll be pleased to hear. And then I'm going to hand over to the people that you're really here to hear from, our speakers. So we've got Philip Reed from Withers, who's going to guide us through the basics of charity trading and the legal considerations. We're joined by Michael Gladwell, Managing Director of Upbeat Clean, and Ali Ward, Trustee of Slate, who will share practical lessons from what they've found from setting up and running trading within a small charity. At 3 p.m, we're going to open the floor for Q&A. So as I said earlier, please do drop your questions into the Q&A box at any time, and we will try and answer as many as we can. We'll aim to wrap up at 3:20 with some signposting to further support and resources, including some training opportunities we've got coming up later in the year. So that's our plan, and we're really pleased to have you with us. So really briefly, for anyone who isn't familiar with NCVO, we are the largest network for charities and volunteering, and we're really proud to represent and support over 17,000 voluntary organisations of all sizes, from the biggest household name charities to the smallest community groups. Our members range from big medical research charities to local amateur sports clubs. But at their heart, they all have the aim of making the world around them a better place. And if you're not a member already, we would really love you to join us. By becoming a member of NCVO, you can save time and money. As a member, you get access to information and guidance, lots of downloadable tools and templates, discounted training, and the sector's most encompassing research and more. Only members have access to everything that we offer. And if you're a small charity with an income under 30,000, membership is free. You can find full details and join at ncvo.org.uk. So just the outcomes from the session. By the end of today's session, our aim is that you'll leave with a clear understanding of what trading actually means in the charity context. We're going to have a look at the different types of trading activity and clear up some of the grey areas that often cause confusion. We'll also talk through when it might be appropriate to set up a trading subsidiary, and we're going to cover things you need to think about in advance, from risk and governance through to practical and financial considerations. We want you to leave this session feeling confident about where to find reliable guidance and advice so that any trading activity you're involved in is compliant with charity law and aligned with good practice. And finally, you're going to hear directly from charities that are already trading. They're going to share what this has looked like in reality, what's gone well, and what they've learned along the way. Just before we dive in, I just want to take a minute to explain why we felt this was so important. Many charities are under growing financial pressure. Costs are rising, income is less certain, and that makes it harder for you to plan with confidence. And trading can be a part of the answer. It won't replace grants or donations, but it can offer a more reliable and flexible source of income alongside them. For some organisations, it also creates opportunities to extend impact, whether that's reaching new audiences or meeting needs that are currently being unmet. At the same time, we know that you've got a lot of uncertainty. You might not be clear on what counts as trading or what's permitted, and there's confusion about what a trading subsidiary is, when it's required, and what's involved. And that's why we wanted to get you all here today to talk it through and hopefully make it clearer for you. So before I hand over to Philip, we're just going to get a quick sense of where everyone is starting from when it comes to trading. So we're just going to do a quick poll. So you should see a few options on your screen now that describe different levels of experience with trading in charities, from not trading at all through to trading being an established part of your income. There's no right or wrong answer. It's just a way for us to understand the mix of experience in the room and shape the discussion as we go along. So if you could pick the option that feels the closest to your organization's current position, and we will share the results in just a minute. I can see lots of people replying. It's nice to see that some people are trading on a small scale already. And there's quite a few of you, I think, that are not trading at all or just exploring the idea. So I'm now going to move on and hand over to, I'll share the hand over and to Philip.
Thanks, Frankie. So as Frankie said, I'm a charity lawyer at Withers, so I'm a partner in the charities and philanthropy team. I advise almost exclusively charities, also some philanthropists and some others who are in or adjacent to the sector on charity law, regulation, tax, fundraising, governance, all of those fascinating areas. I'm going to take you through on the next slide, please, Frankie, as was trailed, a few of the key basic questions that you need to think about when it comes to charity trading. So starting off with what is it? A distinction between charitable and non-charitable trading. Essentially, I'll introduce some charity law jargon at that point. Thinking about the tax implications of different kinds of trading, whether you need to set up a subsidiary and why, and if you do, what that looks like, how you do it, and some of the pitfalls and things you need to keep in mind when you go about that. And then I'll round off with some key takeaways before we hand on to the next session. Next slide, please. So what is it? Well, I mean, all of you in the room probably have your own idea about what trading means, and you're probably broadly right. There isn't a set legal definition of trading. It's not something that you can go and look in the Charities Act to find out what it is, or in any other act. But the meaning is something that has emerged out of case law over the last many years, and it's something that HMRC is really the authority on. It has a piece of guidance which sets out its view of the badges of trade as those have emerged out of case law. And they are things, they're indicators really. If these are going on in connection with your activities, then the more of them that there are and the more consistently they're represented in those activities, the more likely it is that you are trading. I've put a few of them on the slide here. One of them is a profit-seeking motive. So is the activity carried out with a view to making money, rather than you, let's say, giving away goods out of your charity? If it is, that probably feels like trading. If you're doing this regularly rather than as a one-off, that's another badge. If the goods that you're selling, let's say they are goods rather than services, you're getting them in and you're making some alterations to them, you're developing them in some way, even if it's just rebranding them before sale, that feels like trading. That's in contrast to, let's say, what goes on in a charity shop where you receive a donated good and all you're really doing is converting that into cash. That's not going to be trading in this sense. Although there might be other things going on in a charity shop that are trading, if, let's say, it's the charity running them. The number of transactions that are carried out is another badge of trade. So again, if this is regular, if it's an ongoing thing, if you don't just do it a few times and then stop, then it's probably trading. If you're in any doubt, then do just Google badges of trade HMRC and you will find the page that sets out all of these with a little bit of discussion from the revenue about what it means by those badges. But I think for these purposes, and actually for most purposes, if it kind of looks and feels and smells like trading, then it probably is. Next slide, please. So I'm going to get into the distinction between the two main types of trading. So primary purpose trading, and then on the next slide, I'll think about non-primary purpose trading. This is also sometimes called charitable or non-charitable trading, but the technical language is primary purpose and non-primary purpose, and that's what you'll see reflected in guidance from people like the Charity Commission. So what's primary purpose trading? Well, that's trading that directly furthers your charity's purposes. Purposes being the objects at the front of the governing document, which are what you are there to do as a charity. If you're carrying out trading that goes straight to those purposes and furthers them directly, that's primary purpose trading. There are some examples on the slide. So let's say you're a charitable museum, you sell tickets for people to come in and view the collections. That is exactly what you're there to do as a charity. It's to educate people, to show them the collections, whatever they might be. That's primary purpose. Equally, if you're a charitable independent school, you're charging fees for education, that's primary purpose trading, or a theatre selling tickets to come and see productions. The profits associated with those kinds of trades are exempt from tax. The relevant tax will depend on your structure. So if you're a corporate charity, it will be corporation tax. If you are, let's say, a charitable trust, it will, strictly speaking, be income tax most of the time, but it won't be charged to you individually in a private capacity. It would be in your capacity as a trustee of the charity. There are some other kinds of subcategories, if you like, of primary purpose trading where the income is also exempt from tax. These are on the slide. So one of them is beneficiary trading. So let's say you are a disability charity, and one of your activities is that you have beneficiaries of your charity, so people with disabilities, working effectively for the charity, producing goods for sale that are then sold in the shops. And those goods are not anything to do with your purpose directly. They don't themselves relieve disability, but it's the act of the beneficiaries being involved in that work, perhaps helping them to develop skills and experience that they can then use to become more independent, that is the direct furtherance of your purpose. So that trading activity, again, will fall within the safe harbor and the income will be exempt from tax, or rather the profits. Ancillary trading is another one of these kind of slight carve-outs, and this is where there is some straightforward trading that you're doing that doesn't look charitable necessarily, but it's really just incidental to the wider work. So if we go into our museum again, maybe there's a cafe in there. The cafe is really for the people who are viewing the collections. It enhances their overall experience. It encourages people to come in, view the collections, have a cup of coffee. That's all part of the primary purpose trade. So it's ancillary, and again, you're within the safe harbor. There can be some wrinkles, as always, with these things. So let's say in your museum, the cafe is right at the entrance, and half your footfall is actually people who may not even be aware that this is part of the museum, or certainly don't have any intention of coming in and looking at the collections. You might then have an accounting issue where you've got part of the provision in the cafe based on essentially numbers of customers is non-primary purpose, non-charitable type trading, and you might need to account for tax on that bit. And the other part is ancillary. So there can be some bookkeeping wrinkles to think about, but just as an example. So next slide, please, Frankie. Non-primary purpose trading. I mean, you've probably detected from the way that I described primary purpose that this one means basically everything else. So any other trading that your charity might carry out that just raises money. So it doesn't go directly to your purpose. The fact that it raises money that you then apply exclusively for your purpose isn't enough. So again, going back into our museum, there's a shop in there and it's selling pencils and rubbers and badges. Those things don't directly go to the museum's purpose. There's no, let's say, educational or artistic value in those pencils. They're not educating people. They're not enhancing their kind of overall experience. It's just raising cash. That's non-primary purpose trading. So in principle, the profits of that trading are subject to tax, even though the trading is carried out by a charity. Next slide, please, Frankie. The small scale exemption may come to the rescue for some charities that are selling pencils in their museum shop or doing something equivalent, but in a small way. The law and tax law kind of says to those charities, look, we get it. This is pretty small fry. We don't think you need to go to the bother of setting up a whole charity trading subsidiary and everything else that goes with that, which I'll come on to for this little bit of activity. And the scale that tax law considers to be small is on the slide. So the maximum turnover that can apply to this kind of trading is £80,000. And that's if your charity's annual income is over 320,000. If you're a smaller charity than that, then the level of non-primary purpose trading that you can do within the small scale exemption is correspondingly lower. A key point to be aware of in terms of this exemption is that if you go over that threshold, so let's say you're in the largest bracket of the small scale exemption, but your turnover from your non-primary purpose trading is 90,000, the profits on all of that trading will suddenly become taxable. It won't just be the bit that's in excess of the small scale exemption. Effectively, the whole exemption disappears as soon as you go over the turnover threshold. So it's something to keep in mind. And it's something that can make you feel a little less comfortable if you're just starting to edge up towards those thresholds. So you need to keep a bit of an eye on it if you're relying on this. Next slide, please, Frankie. So let's say you're planning to, you expect to, or you already are carrying out within your charity non-primary purpose trading that is beyond the small scale exemption. Maybe then you're thinking about, we're feeling a bit exposed. We oughtn't to be paying any tax. We're a charity. What should we do? Well, that's where the trading subsidiary comes in. This is important for the reasons that I've put on the slide there, which I'll go through in a moment. But there's also a slightly more techie legal point around the powers of your charity. So all of you who are from charities will have a governing document of some sort, whether that's articles of association, a trust deed, a constitution. Probably at the front end of that, there'll be a set of charitable objects, statement of what you're here to do. Probably after that, there'll be a set of powers. And those are the powers that the trustees can exercise in furtherance of the objects. That's what you're allowed to do as a matter of law. You may well have an express power or some express powers that refer to trading, carrying out trades, or words that mean that. And they might be circumscribed in one way or another. So, for example, your powers might say the charity can trade provided that it doesn't incur a tax charge or something to that effect. So if you are actually tipping over the small scale exemption, you might be looking at a potential tax charge, but you might also be looking at the trustees possibly having exceeded their legal powers in conducting that trade. So there comes the possibility, and I mean it's remote, but it is a genuine theoretical risk that the trustees are going to be exposed to personal liability, because they oughtn't to have exceeded their powers in doing this. They have. There's then a tax charge. In principle, those trustees could be personally liable to pay that tax. That's a kind of worst case, but just to kind of set the scene, I suppose. Apart from that slightly technical issue, why else might you think about using a trading subsidiary? Well, I mean, one reason is, well, obviously to avoid the tax. But secondly, you might just want to ring fence the risk. Maybe, and charities start doing all sorts of different trading. Some medical research charities start getting into clinical trials. There are thousands of different kinds of trades that charities could possibly engage in. Some of those will involve more risk than others, sometimes commercial risk, maybe other kinds of risk, maybe reputational risk. To an extent, I mean, less so with reputational, but to an extent, you can ring fence risk within a subsidiary because it's that company that is carrying out the trade and is incurring liabilities in its own name rather than in the name of the parent charity. There can also maybe be marketing or branding advantages to using a distinct entity with its distinct brand to deliver a particular kind of trading activity, perhaps. What is a trading subsidiary is what we'll look at on the next slide, please, Frankie. So ordinarily, it is what it sounds like. It's a normal commercial, non-charitable company, typically a company limited by shares. So the charity is the sole shareholder and then appoints a board of directors to run the trading subsidiary. There are other ways to do this, though. I mean, increasingly, and I've set up a number of these for charities, people are setting up trading companies as community interest companies or CICs or KICs, as I usually call them, because it's slightly easier to say. A KIC is a company. They can be limited by shares or by guarantee, but they work in pretty much the same way as any other company. They're not charities, but they do have to operate for the benefit of the community. They'll have an object or a purpose in their articles, which sets out what that beneficial work is to be, what the benefit is that they're going to deliver. If they're wholly owned by a charity and actually they donate all of their distributable profits to their parent each year, then that can be part of the benefit to the community that the KIC is delivering. It can go into its community interest statement that it makes and that it reports on each year to its regulator. The process for setting up one of these things in itself is reasonably straightforward. So creating a company is quite a straightforward thing to do. You draft a set of articles of association. There are model articles out there, which is the governing document for the subsidiary. You fill in a form for Companies House, you pay a fee, again to Companies House. If you're doing a KIC, you also fill in an additional form that goes to the KIC regulator that explains your community benefit work. You send all that off and a company number and a certificate of incorporation comes back. Obviously at that point, you have company directors in post who start owing duties at company law and all this sort of thing. It's reasonably straightforward to administer. The trading company will have to produce accounts and these sorts of things. It will have to make filings, but it's probably not too dissimilar from what you're already doing in the charity. So it can be fairly easy to manage from that point of view. But there are a few issues to keep quite clearly in mind, I think, if you are setting up a trading company. And some of these I'll go through now. So the first one, and because this really is one of the key issues and one of the issues that the Charity Commission is very interested in when it comes to trading companies, is the question of independence and the management of conflicts. So trustees of charities have various duties, including a duty to act only in the interests of the charity. The trustees of your charity can't act in the interests of your trading company. And your trading company directors have a duty to act in its best interests. You do need to treat the two things as distinct and real legal entities. So the trading company can't just be an accounting exercise for the charity. You can't just think of it as another department within the charity in the way that your fundraising team might be. It is something distinct and it needs to be treated that way. There have to be meetings of its board. It has to consider its own business actively. And any conflicts that arise have to be managed. So those are conflicts for directors on the board of the subsidiary in the same way that you probably already are thinking about conflicts that may arise for trustees of your charity. And in the next slide, I'll go through some areas where those might arise and might need to be managed. So here are some of the arrangements where you need to think about the relationship between the parent charity and the subsidiary. So at the outset and then in an ongoing way. So at the outset, the trading company is going to be running a business of some sort. It's going to be trading. We know that because that's what it's here for. And there's going to be money coming in. The intention is there's going to then be profit thrown off. The trading company is going to, in the ordinary course, donate its distributable profit up to the parent. That's treated as deductible for the trading subsidiary. So effectively, that comes out before the calculation of its taxable profits, which should be reduced, not necessarily all the way down to zero, because it's never quite that neat, but very far down. So effectively, your non-primary purpose trading, once conducted within this new arrangement, becomes tax efficient. So the intention is that there's a business that throws off profit. How does the trading company get going? How does it start doing that? Well, it's going to need some money. It's going to need some startup capital, essentially. Where does it get that from? It can go off and ask the bank, but probably the bank's going to say, you look like a brand new company. Where's your track record? I don't know if I'm going to lend you money. Maybe the charity will. So often with these sorts of arrangements, you have the charity making an arm's length market rate loan down to the trading subsidiary. So it bears interest, it's repayable, it's on ordinary commercial terms. Obviously, if you've got any individual who's both a trustee of the charity and a director of the company, that person is conflicted in respect of any decision making around the loan. So you need to have on the trading company's board a number of independent people, a quorum's worth at least of independent people who are able to turn their mind to that arrangement and make a proper decision. It can be quite tricky to find those independent directors. But sometimes a good place to look is former trustees of the charity. Maybe you've got people who resigned relatively recently or are coming to the end of their terms. It can be a way for them to keep being a bit involved in a slightly more lightweight way. When the charity is making the loan, it needs to approach that as a financial investment. So that means the charity's trustees need to think about it reasonably carefully and essentially compare that proposed investment to other investments that might be available to the charity in the market with the spare money that it has for this arrangement. The subsidiary is obviously going to have to convince the charity trustees that this is an investment worth making. So there ought to be, at the subsidiary level, a credible budget, business plan, cash flow forecast that allows the charity trustees to say, yes, we're happy to make the investment. Here's the loan. This is the rate. We are confident that you're going to be able to repay. These repayments are made separately from the donation of profit that then arises after that. So there is an exercise in keeping those distinct. So that might be enough to get the thing going. But what else might the subsidiary need going forward to run its business? Ordinarily, in the early days, you set up one of these trading companies. It doesn't have the wherewithal, maybe even with its startup loan, to employ whole teams, take on offices. Obviously, that's if the trading is very substantial, you might be looking at something that's much smaller, even if just initially. But if there are things that the trading company needs, again, the charity can supply those, but in a suitable way. So not so that there's any subsidy of the trading company, because that's not proper for the charity to do. But there might be recharges in place if there's a bit of staff time being used down at the subsidiary level. If the subsidiaries may be occupying a bit of the charity's premises, there might be a license, and again, a license fee payable. So these kinds of arrangements can all be put in place in a reasonably straightforward way, probably with a lightweight agreement in place, and again, with suitable fees being paid and conflicts being managed. Next slide, please, Frankie. Hopefully that was all reasonably clear, and obviously quite a quick run through about some of the issues around trading. I've just put key takeaways on the slide. So that distinction between primary and non-primary purpose trading is obviously key. Keep an eye on the level of income if you're relying on the small scale exemption. Use a trading company if your trading is getting beyond that level, or if you just want to ring fence it anyway for other reasons. Think about your governance, think about conflicts if you do this. Any support needs to be arm's length, commercial rate. The charity can't subsidize the company, although it can support it in other ways. And in terms of that profit flowing back up to the parent charity, ultimately, which is what we all want, make sure that's all carefully thought about, clearly done, and well documented. That's all from me for now.
Thanks, Philip. I'm now going to hand over to my colleague Josie, who's going to have a fireside chat with Michael and Ali.
Hello, can you hear me? I assume you can. Great. Well, really nice, and thank you, Philip, for such a great introduction. I'm really delighted to be joined today by Ali and Michael, who I'm going to kind of have a bit of a chat with. I'm going to start by just asking you both to introduce yourselves and also introduce the charities that you're representing. What are their purpose and what's their structure? So, Michael, can I kick off with you?
Yes, of course. My name is Michael. I work for Upbeat Communities. We're a refugee-focused charity that helps refugees rebuild their lives in Derbyshire and Lincolnshire. And we have two social enterprises that are trading. Derby Language School, which is a commercial language school that makes a lot of profit, and the profit provides free English classes for asylum seekers at very large scale. And then we have Upbeat Clean, which is a commercial cleaning business that helps refugee women into work, that's scaled quite large in Derby, and we're now franchising across the UK.
Fantastic. And Ali, go for it.
Yeah, sure. Hi, everyone. I'm Ali Ward. My day job is running Social Enterprise Yorkshire Number, and I sit on a number of boards, and one of them is Slate, which is based in Leeds, and they are primarily a furniture reuse organisation that work with people with learning difficulties. So they originally set up as a social enterprise, i.e. a company limited by guarantee, and they moved to a charity because they went into partnership with two other charities which set up a trading organisation, a non-profit, where all the profits come back to the three owners of the charities. So they had to change to be a charity to be able to receive that. They run two furniture reuse organisations and a cafe, and they have people with learning disabilities working in all of them, some volunteering, some paid staff.
Great, thank you. So these are two people who've been there, done it, and got the t-shirt. So hopefully out of this conversation, you will hear some of the lessons that they've learnt and what they might think about if they were doing it again. But my next question is, what made you decide whether or not to set up a trading subsidiary? Because assuming there are people on this call that are sort of in those thinking, exploring stages. And perhaps you can tell us a little bit about a little bit more about the relationship between the two organisations if you did set up a trading subsidiary. Ali, do you want to go first this time?
Okay. I'm going to talk about the relationship between Slate and then the joint enterprise thing that they set up, which is Revive. So Revive is another reuse organisation. It started off being wholly owned by 3 charities and is now 2. And that is they're a CIC and they are primarily there to make money for the 2 charities that own it. So they work closely together, but they are totally separate. And it was set up that way so the risk was taken away from the actual individual charities. So we looked into having one as a lead, but you've got your insurance implications and all that. So it just made sense that a wholly owned separate organisation was set up. And we set up as a kick purely because it was the simplest thing to do at the time. And yes, we paid tax for the first year while we put money into reserves. So that's something to be aware of, your tax implications. But if I was setting up now, I would always set something up to trade because it's the only way these days. You really do need to be trading.
Thank you. And Michael, go for it.
Yeah, so Derby Language School and Upbeat Clean are 2 very different models. Derby Language School isn't a separate trading subsidiary, because enough of its income is contracts around refugees. And although we make a lot of profit on those, which we then use to provide free classes for asylum seekers, it's within our primary purpose trading. But then we also make a lot of money from English, French, German, Spanish classes to corporates. So it's an interesting one. We got legal advice and we're told there's no need to separate that. And ESOL is VAT exempt, so you can scale a very large ESOL part, and the foreign languages part just has to stay below the VAT barrier. Whereas commercial cleaning has a lot more risk. It also is not VAT exempt. So we, within year 2, went through the 90k mark. We now turn over about 1.4 million. So it was really about protecting risk from the charity. And as I said, protecting the charity from VAT, which would also damage the language school. And the parent charity itself, just to give some perspective, turns over about 1.2 million separately from the cleaning business. So you can't afford for one to risk the other. They're in an interesting balance. We are currently going through a whole governance for growth season, which is a nice way of saying we're working out whose boss is who. And so that's interesting for us, looking at actually now that the cleaning business has gone from a nice small project next to a very large charity to a bigger cleaning business than the charity, and we tripled last year, so we're likely to far exceed the charity within a year. How do you make sure that the board of directors of one and the board of trustees of the other trust each other and work together? So that's a really challenging step that we're working through at the moment.
Great, and really interesting to hear you both talked about the sort of tax implications, which I know there are a lot of questions on that we've had already in terms of the thinking around what to do and how to set things up. Michael, you did mention getting some advice.
Yes.
As you went along. How did you know where to go to get advice? Like if people are looking at where to go to get advice, where did you go? Where did you look?
We got advice from solicitors who specialize in this. I can't remember, I'd like to quote them, who it was, but we decided, we always, as a charity, try to get external legal advice that we pay for, importantly, because frankly, if a legal decision is wrong and you haven't paid for it, I understand it sits largely with the trustees. So we often seek legal advice, including things around VAT specialists, to make sure that we have an email that says, yes, this is fair, this is VAT exempt, this isn't VAT exempt. So we are, big believers in not saving £1,000 on solicitors, because you could end up losing a charity or huge fees if you get it wrong. So,
thank you. Okay, so moving on. So based on your experience, and I guess this is sort of to help people who are exploring and thinking about trading, what 3 questions do you think senior leaders or trustees should be asking themselves when making decisions about whether to trade or not? Michael, go first.
I think for me, it's about, is this actually worth the risk? There is a risk to trading. And I agree with Ali. I think there's a risk to not trading for your charity massively. But I think, what is the end goal here? If you're going to invest money and time and management skill into this, is the 10 years from now worth it? So for us, it was about wiping out the social issue in Derby for refugee women not finding work. I didn't want to create 5 jobs. If I wanted that, we looked at 30 business models at the beginning. We looked at things like a sewing shop, which would be great for refugee women. A lot of them can sew, and that's a lovely job. But in reality, that helps 5 people, probably 4 refugees and 1 British person. So for us, it was about, we're going to take a risk here. We're going to put our energy into this. We want something that can scale and be really sustainable. So it's sort of checking that we're not picking a hobby topic of a trustee or a governor or a manager, but is this actually a real plan that can impact huge numbers of lives and be scalable and financially sustainable? Have we already got the skills in our SLT? Just because we've got good operational charity people doesn't mean we've got entrepreneurs. And or can we recruit them? And I think that's crucial. You see a lot of social enterprises. We're not the only commercial cleaning social enterprise in the country. We are the only ones who have won the King's Award, so thank you. But you know, some are run by entrepreneurs, some are run by operations managers, and you can see the difference after 5 years about scale. Massive difference, and that shouldn't be overlooked. And I think finally, are your finances and organizational stability, is it strong enough to take the risk of piloting something and failing it? Because you can't afford to risk the charities. Yeah, don't risk what you've got for what you want, would be my 3rd question.
Great advice. Ali.
Okay, I'd seen Michael's answers before I wrote mine, so I can say I fully agree with everything Michael says, because that is all totally true. And I was trying to think of coming at it from a slightly different angle. So one thing is, some people think, oh, we've got to trade, what can we do? But why are you doing it? And how does it advance your charitable purpose? So it's about making sure you're staying true to what you are, and not just a bit like some people with grant funding then change what they're doing because they're just following the money. Really think about it, and is this going to hit your charitable purpose? Another thing, I know we've talked tax, but what rules and regulations do we need to abide by? So, for example, health and safety, trading standards, are there any certification needed? So a lot of people immediately go into running cafes, community cafes, because there seems a great benefit to the community. They can be a great benefit, but they can also be a big money eater, and they don't necessarily always bring in the profit that you think they would do. But you've got to think about your food hygiene, all that sort of stuff that you would need in place to run a community cafe. And also, how will we measure success? So I like how Michael said, think about it in 10 years. But what point do you say we have to pull the plug on this? Because that is a hard thing to do, because you are potentially making people redundant. You're getting rid of a service or goods that people were buying. And I know that at Slate, we did have 2 community cafes, and we had to lose one of them because it was just losing money hand over fist. So that is something that you really need to think about. What measures have we got in place to say this isn't going to work? Because actually, sometimes you can go on too long because we care too much and we want people to keep the jobs. But actually, you've got to be cutthroat in that respect to say, no, this isn't working. Bang, we've got to shut it down. Sorry, that wasn't a right positive one at the end, but you're not setting up to fail. And as well, really, really do your research. Like Michael said, they'd looked at 30 different options and stuff like that. Just because you think something is what you think will work doesn't mean it necessarily will. So really, really assess and do your research.
And it's worth checking. Just because other people are doing it doesn't mean it works. Like, I think cafes is a great example. You can see everyone's running a community cafe. Cafe was one of our 30 ideas, and we didn't run it on purpose because there are ones that manage to make it work financially. Most of them are bust or going bust or using charities' money to run them. And so it is looking at asking those deep, honest questions of people. But you run a social enterprise. Is it profitable? Okay, can we define profit here? Have you got full cost recovery and you're still making profit? No, sorry, we use grants and we use this. And at that point, you start to ask those tricky questions. You see that very few social enterprises actually make real profits. And I'm not talking about profit for the sake of profit. I'm talking about it for the sake of sustainability. But research has to be more than oh, there are lots of this, therefore we could do this.
And you'll also find that a lot of people will be totally honest with you in our sector. So like if somebody came to me and says, we're thinking of setting up a community cafe, first off, I'd say good luck. But secondly, I'd say, right, show me what figures you're thinking and let's have a look. And I'll show you some that are actually happening at the moment in a really busy environment. And let's see what it's going to look like. Totally and utterly. And profit isn't a dirty word. That is a thing in charity's head. Profit is not a dirty word. Profit ensures you are going to be there 5 years, 10 years down the line to carry on helping people.
Yeah. I know, Michael, we talked a lot about failure, and I know that you had the same sort of thinking about that in terms of, you know, you have to prepare to be able to make those really difficult decisions about this. It just isn't working, and that can be really hard.
We started a housing project in the middle of the sort of the very successful. So people look at Derby Language School. We made 300k profit over the last 4 years. So it's a good business, upbeat, clean, very strong business, much stronger than the language school. And I think it's easy to see those two. And what they don't realize is that I started personally a housing business in the middle of those two and stopped it after a year because it was a side. I just didn't have the skills, the capacity. I'm not saying we wouldn't do it again as a charity, but we piloted it and we assessed it after a year and we said, this isn't working, is it? Let's stop. And you've got to be able to have that honest thought in there. Is this developing into something that's scalable, profitable, socially beneficial, or are we just flogging a dead horse? And that housing was at that point for us. So yeah, you've got to fail and then learn and then move on.
Great. Okay, on to perhaps a more upbeat note. What would be one piece of advice you would give a charity considering trading? Ali, do you want to go first?
Yeah, sure. I think one of the things that surprised me when we're on, sorry, we are on the one piece of advice. Sorry, sorry, I was looking at a different question there.
That's okay.
Michael's already covered some of this, but ensure you have both the right skills, both on the board and in the charity to move forward. So quite often you'll know when you set up a charity, your board changes once you've actually set it up to what you need to actually continue, because you need different people to set it up and keep it going. Then you need a different group to actually sustain it. And then you need a different group and mindset to bring in the trading side of it. It can be a culture change for a lot of people, and you're likely to meet some resistance in some areas. Some people don't like the idea of trading at all. Others love it. And as I said earlier, ensure you've done your research first and there's a real need for what you intend to do rather than a nice to have. And one key thing is that I say to everyone is pricing. If you are setting up and you are pricing, you are all too often you get, oh, this should be free. Why aren't you doing that cheaper? You're a charity. Yes, you're a charity, but that doesn't mean you are there to give stuff away. You are there to bring in money to ensure you can continue to deliver the services or your charitable aims. So your pricing has to be competitive. It has to be key. And it has to ensure that you're financially sustainable, as Michael said. So your pricing is absolutely key. Because all too often people go in with such low pricing because they think, well, we're a charity, we've got to price less. And you don't. And stay professional. A lot of people, it is a total different thing. So just because you're running a charity doesn't mean that you can't run it. You have got to run it like a business, but a business with heart and a business with empathy. But think of your bottom line, triple bottom line accounting, social, environmental, and financial, because without your financial, your social and environmental are going to go, whoa, bye.
Michael, any comments on that and anything you want to add?
No, I would totally agree. I think we've won massive tenders this year, between 100 and 300 grand a year per building to clean. We're talking vast buildings with vast companies. I don't think we were the cheapest for any of those tenders. I definitely didn't want to be the cheapest for any of those tenders. We are an excellent cleaning company. You don't choose us because we're owned by a charity. You choose us because we're an excellent cleaning company. And then you realize that the 200 grand a year that you pay on cleaning that lovely building of yours goes to a charity. If we aren't an excellent business, we can't price with excellence. And if you can't price with excellence, you can't reinvest in marketing. You can't hire the staff you want to general manage it, to run it. So the whole thing has to work as a really successful business with a successful business mindset, not, I hear people all the time with trading ideas saying, oh, we're going to do training and it's probably like £150 a day. And I'm thinking, your staff member doing the training costs you 150 quid a day. You've not priced in the salesperson. You're not priced in the marketing cost. You've priced in nothing. And then they say, oh, so that's got £10 profit in it because the person costs 140 quid a day. And it's all about, have you got a product that's actually valuable? And I think in terms of what I would say is, you've got to find something that companies are willing to buy, that they're already buying. So they've got a budget line for it, or individuals, but they should be already buying it. I think one of the big challenges I hear with social enterprises is people want to create a new idea and then sell it to companies. Well, from a marketing journey, that's a really challenging thing to do. You can't, unless they've got a budget line, the manager isn't going to give it to you. So the joy of cleaning is every single company has a cleaning budget. The question is, can we take yours or not? And so I think if you can look at our customers actually buying this and then work from there, you have something that you can sell at a good price and at scale.
And I think just to add on to that, one of the other things is people aren't necessarily going to buy from you just because you're a charity. If you go out and talk to your customers, so if you take Slate, for example, people who come in there, the majority of people who come in there don't give two hoots that you're working with people with learning disabilities. They want cheap, good quality furniture and good service, good customer service. And if they're not getting that, they'll go elsewhere. There are some who come to you because they do like what you do. They do like the fact you're doing that. And they like the fact that you're environmentally friendly by reusing products. But the majority of customers come in because you've got a product they want and they can't get it anywhere else, or you're nearest or whatever. It isn't about, oh, they'll buy from us because we're a charity. If you think that, it'll fail.
I realised my mistake. I skipped a question when we were going through this. So I'm going to ask, we're going to go back a little bit. That was my fault, Ali, and I'm sorry about that. I caught you off guard there. But as our final question, we've got a few more minutes before I hand over to Frankie for the questions. But what has surprised you? Like, what's been the surprise with trading? Ali, do you want to go first on this one?
Okay. I was going to say the thing about why people buy from you. It's not. So yeah. I'll do something different. So when we set up the separate kick that was owned by 3 charities, that's a tip shop. So it's when you go to the tip, you can actually buy stuff from there. So people were like, oh, I thought it was safe bringing my wife to tip, and I have to bring my wallet and stuff like that. But what surprised us there, because it was small goods, it wasn't furniture. We're on course to hit that organisation, that separate organisation, that the profits go to 2 charities, is on course to hit 2 million this year. And the average spend per customer is £6 odd. So you can see the amount of people that go through that. And that is absolutely huge. And I'm one of the co-founders there, and it's one of the things I'm proudest of because it helps so many. But again, so many people don't care that the money's going to 2 charities. They just care that they can go in and get an absolute bargain for £1. That is what they care about. They care about the products they can really get. But that one just flew. That one took us, even though all of us who set it up had been involved in reuse for years, that absolutely blew us away because it was a total different animal. And it's brilliant when that happens. But then on the other hand, so that has surpassed 2 of the organisations that were involved in it, and is so bigger. But I think the key thing is I had the answer. It was the thing about the people just come and buy because they want something from you. And too often I see charities that aren't run professional, that don't have and you have the clash of cultures between the business and the social aim. And that is really, really, really hard to get right. But when you do get it right and you have everyone buying into both, that is when they really fly. If you've got that clash, you're going to struggle. Sorry, I got all mixed up on that one because I was thrown by the last one.
That's okay. That's okay. My fault. Michael, anything you want to add or?
Yeah, I just think we're surprised at how scalable something is. If you have a disciplined, well executed plan, it's not a fluke. It's you're starting with the end in mind. You're doing business planning. You've got 90-day goals that you're all achieving as a team. You're running a strategically run company over multiple years. The impact is vast. We'll pay over £1 million this year to a majority refugee team. Our charity could never have imagined. Before that, we were just doing CVs, frankly, for refugees around getting employability. And you can give a refugee woman with kids and school drop-offs as many CVs as you like. There isn't going to be a job following because Aldi says, can you do this day and this day? And they say no, and that's gone. So I think what we've been surprised by is that actually, if you can make something excellent that customers already want and you can compete, the impact is just, I mean, we've got 70 cleaners. Like that we're doubling every year. That will only go bigger. Your charity can have more impact than you could ever imagine if you can tap into a customer instead of a funder. And it's so much more scalable than a funder is, because the funder just wants a new idea every 3 years. You have to rebrand everything and pretend it's a new one. Whereas your customer wants stability and they want to know that that's shot by the tip, or that cleaning service is going to be there for the next 10 years and they can hire you. And as long as you've tied your social impact into the business, it's just, it's endlessly exciting.
Great. Thank you. I think that finishes our chat on a very, very positive note. So on that note, I'm going to hand back to Frankie to take us through some of the questions. I know there have been a lot of questions coming in, so I'll hand over to you.
Thanks, Josie. There have been a lot of questions put in the Q&A, but if you haven't already, please do feel free to add your question. You should find it at the bottom of your Zoom screen if you haven't found it already. If there's any you'd like to upvote, then please do so, and we will try and get through as many as we possibly can in the time that we have. Any that we don't get through, we will try and send out answers in the follow-up email for you. One of the questions that I can answer myself is that there is a question about whether Michael and Ali can share their email addresses. They have both very kindly said that they will allow their email addresses to be shared, and you can connect with them both on LinkedIn as well. We will share those email addresses in the follow-up email. So just going on to some of the questions. One of the first questions is for Philip. And it's around a charity leases a building. It wants to lease one of the rooms for use regularly by outside local community groups. No services will be provided. Is that class, would that be trading by the charity? And if not, what would be the implications going ahead?
So bare lettings income isn't normally trading. So the person asking the question, I think, maybe had some idea about the requirements, where if you're providing extra services in addition to the room, so catering, whatever it might be, you might be bringing the whole thing into the arena of trading. But just bare lettings oughtn't to be, because effectively that's more of an investment activity. It's a bit like dividend income being thrown off shares. It's rental income being thrown off property, or royalty income being thrown off IP that you're licensing. So you should be all right. But you're right to ask the question and to just think about issues like that and to make sure that you're on the right side of the line.
So on the same theme there, Philip, is a local authority contract for service provision, would that be classed as trading?
It depends is the lawyer's answer to any question that you might ask me. I mean, the local authority is paying you to do something, to provide a service. So that service may either be the provision of something that directly furthers your charitable objects, or it might not. If it does, then what you will probably have is a primary purpose trade. And I imagine that's what the local authority wants to pay you to do. If it doesn't, then you might have a non-primary purpose trade.
And again, this is quite a similar one as well. If they were selling so opportunities for corporate volunteering, where would that fall under trading as well? Or
so charity is selling opportunities to a corporate to
yes, it is volunteering.
send some of its employees to the charity. It's interesting. I haven't seen that structured as a sale before. I mean, I think you'd probably want to look at how you've papered that up with the corporate. I mean, it might be that you say, here are opportunities to send volunteers, and equally you might want to make a donation that's voluntary and unrelated to the supply. And you could potentially uncouple things, which as long as it's kind of done honestly and properly and in good faith, can take you outside the arena of having to think about trading. But I mean, it's a bit of a grey area, that one. I mean, in a sense, you're furthering your purposes because you're having people in to do that. But what's the product that you're really selling? There might be a kind of marketing advantage for the company. There might be that you're providing something that's more in the way of an employee benefit on their side than something that's charitable. So you could be getting yourself into a non-primary purpose trading activity. So I'd be inclined to uncouple that arrangement so that it isn't really a quid pro quo and it's something slightly different.
Again, another question for you, Philip. Can a charity carry on non-primary purpose trading in parallel with trading by the trading subsidiary? So if the trading subsidiary income has reached the VAT threshold, would that have an impact as well?
Well, I mean, I think the trading is either being carried out by one or the other, or both. What you can't do is draw a fictional line down the middle of the trading and allocate some of it to one or the other. Or you could get into all sorts of problems if that's what you're looking to do. But there's nothing wrong with a trading company having some trading activity that is legitimately its own, and the charity having some trading activity that is legitimately its own, and maybe the charity's bit falls within the small scale exemption or whatever. I mean, that's probably going to be complex to administer unless there's some genuine, clear distinction between the two activities. So if it's your museum, trading company runs the shop, museum runs the collections and the ticketing. They're both trading, but they are distinct areas of trade. Any kinds of arrangements that seem to introduce a degree of artificiality start ratcheting up the regulatory risk and the tax risk. Because there's nothing regulators like more than looking through the way that people have characterized things in their own accounts and even their own agreements and saying, we don't believe you. We think this is what's going on, and here's your tax bill. So be cautious.
Thank you. And I know you covered this on the slides, but the threshold figures on the slide, were they for income or profit?
Turnover, income.
Okay.
Yeah, not profit. So the thresholds as a result are quite low. It really is meant to be just for pretty small scale stuff.
And when you were talking about trading subsidiaries, you mentioned that it could be a company or could be a CIC. Would you say there are any benefits of having a CIC as the trading subsidiary as opposed to the other form?
Yeah, I mean, it presents well. I think the KIC wrapper is one that the public understand. There's a Waffle House that I go to reasonably regularly, which is run by a KIC. And the fact that it says KIC on the sign kind of gives me a warm, fuzzy feeling when I go and have waffles. So there is a kind of branding upside for the trading company if it's a kick. There aren't any real tax advantages, so none of the charity tax exemptions are available to a kick. Some local authorities might give them discretionary rates relief, but probably less so these days. So it's probably fairly neutral. And on the downside, if you're using a kick, there is that slightly bigger overlay in terms of regulation, because you have the kick regulator. I mean, it's pretty light touch. It's nothing like the Charity Commission, but you do need to report each year, and it's another layer, I suppose.
Related to that, and one of the questions was, are there any particular questions that someone should be asking themselves to figure out the best legal structure for that trading subsidiary?
I think I would be starting. I always think that most commonly the simplest answer is the best one. And certainly when I'm advising people who want to set up a charity, and they might have ideas about, I want head office in the UK, I want a branch in India because we're going to have beneficiaries there, I want a trading company straight away, I want all of these partnerships. I usually advise start small, start simple, and then grow it. And it will organically find its way into where you need to be and what teams you need to have. And similarly with choosing the structure for a trading company, I'd probably start off thinking about a company limited by shares, perfectly vanilla, perfectly ordinary, and then think, is there anything else that we think would really help this, given the nature of the business that we're talking about? So the examples in the fireside chat, if we were doing the office cleaning business, which sounds like a brilliant project, would there be any advantage for us setting that up if that had a kick wrapper to it? Maybe, maybe not. Would there be any upside such that would outweigh the slightly higher regulatory burden? Maybe not. So then I'd stick with the vanilla company limited by shares, which perhaps is what you have, Michael. So that's where I'd approach it conceptually, I suppose, Frankie.
Thanks, Philip. Now over to Michael for a couple of questions. I think you covered this a little bit earlier, Michael. Is the cleaning company a subsidiary, and how does the charity manage a company that is bigger than it?
So yes, we are a company limited by shares. That decision was made with solicitors. First of all, just to go to that, and I think the branding question is interesting. Just to quickly touch on that, because the brand is the story you tell. We talk about being a charity-owned cleaning company, and marketing is marketing. So I think you can choose kick or not kick. There's a way of spinning the right image you want to give to your client. Well, it was about how does a charity manage a bigger trading subsidiary? Well, that is the question we're asking. We as I said, last year we went from 400 to 800 to 1.4 million this year, and that the charity is 1.2 million. So it's a very new question for us to ask. There's no problem with the charity doing it. My personal opinion as to where it will land will be that there'll be very clear reserve matters that the trustees can still insist on, such as the hiring and firing of directors, whether directors are remunerated, whether the articles can be changed or not. So there's probably less than 6 things I think that the trustees should eventually have decision rights over the company's house directors on. And then you have the company's house directors who are Upbeat Cleans companies, or Upbeat Enterprises Limited, to be precise. Their company directors, they, in my opinion, should be making all of the business strategic decisions. And that's still being debated and discussed between these two boards. But I think that's what we're realizing, is that we now need to have a really clear scheme of delegation that is written down, that's in our articles, that's in a memorandum of understanding, because when success comes is when everybody wants their influence on it. And as success has come, there's then suddenly a lot of interest in exactly what's happening with these profits and exactly how this is going. So we're coming in very quickly to address that.
Thanks, Michael. And just another question for you, and you've sort of answered some of this already, but how much crossover is there between the two boards? So like how many charity trustees are on the cleaning company board, or any senior staff on there as non-exec directors?
So we've got, let's say, 7 trustees, and the chair of trustees is also the chair of the directors board. And then you've got 2 external directors, one who happens to be an ex-trustee, interestingly, more by coincidence. Our intention is to continue to add directors with the right skills that we need. And also the CEO of the charity, the group charity, comes to our board meetings and isn't a director currently. So again, in the governance for growth, we'll be working out, should we have 2? My personal opinion is that we want the best skilled business leaders possible in the directors board who can bring that weight and that credibility to it. And we also want to make sure the charity feels psychologically safe by having its representation. But as the managing director, who is not a company's house director, to clarify, as the managing director, my focus is on making sure we've got the right skills in the room.
Thank you. Question for Ali, sort of actually leading on from Michael's one, is in terms of trading and sort of leading on trading, what sort of skills would you expect someone to have in leading on trading? Is it different to what you would expect for someone like running the charity side, I suppose?
It's you want, if you get someone, it all depends, you see, because it depends on what you're doing. So like in Slate, you need someone who's good business-wise, but you also need them to be able to have the patience and understanding to work directly with people with learning disabilities. So that is different. In the Revive one, that is pure trading, retail, fast turnover. And the director there has a background of private sector retail. So we brought someone in who had a background of private sector retail to run that organisation, and that is why it's grown and everything. And then a bit similar to Michael's, so the Revive, I'm a trustee of Slate and I sit on the board of Revive as Slate's representative. The same with the other organisation, SVP, and then we have an independent director who line manages the CEO as such. So I think it depends on what you're delivering and who you're working with. So if you are there, they still have to have the empathy and buy into the values, but that you can teach quite a lot. But you need, to me, I'd rather a really good business person come in, like Michael said, to run like the cleaning contracts. You're working with commercials. You've got to have that level. If you have just worked in a charity and not had any business experience at all, you'd flounder. So you need depending on what you're doing, you need a really good mix or more business-like.
Thank you. Question for Philip. I was told that the charity can be a director in the subsidiary. Is that correct?
You wouldn't normally have the charity itself as a corporate director of the subsidiary.
Okay.
I mean, it is possible to have corporate directors of companies, but that's possibly not for very much longer. It's something that the law is kind of moving against. And equally, the charity might itself be conflicted in respect of some decision making. And then how would that charity as director make its own decisions in that capacity? Well, it would have to do that by the trustees. So you're kind of ending up with quite a complicated arrangement where it might be simpler just to have individual trustees appointed as directors of the sub, in the way that Michael described, which is quite a common model.
Lovely, thank you. Next question. The Charity Commission has a lot of guidance in this area, although it was last updated by them in 2016. Can charities rely on the guidance, or must they rely instead on the guidance from HMRC?
Both. I don't think they're inconsistent, but they cover different areas, and they kind of obviously come at things from a different viewpoint. But the Commission's guidance document, Trustees, Trading and Tax, is pretty good, and I think worth looking at. It's generally, if you want to drill a bit deeper into a particular tax question, that you might look at HMRC guidance, and then you can kind of drill down as far as you want to. But the Commission's guidance is pretty good and still pretty sound, although, as you say, it's been around for a few years.
Thank you. We've probably got time for one more question. An interesting one actually that's come up is in terms of if they're selling sort of donated goods on eBay, would that classify as trading, or?
Well, I mean, running the badges across it and thinking about how charity shops ordinarily work, it shouldn't, if that's all that you're doing. If they're donated goods and you're effectively just converting them into cash by selling them, that oughtn't to be a non-primary purpose trading activity in itself. Often, in fact, when you look at charity shops or online sales of goods, there's other stuff going on. So most charity shops aren't run by the charity, because they're also selling Christmas cards or scented candles or whatever else it might be. And it could be that is also wrapped up in the online sales with some other things that mean it's more complicated, and actually it's going to be easier for everyone if you just put it through a sub anyway.
Thank you. I think we've got through as many questions as we can, and just so we can leave on time, I will move on to the signposting at the end. But if we haven't answered your question, we will try, as I said, to get them answered and to send the responses out with the follow-up email. So before we do signpost to further tools and resources, any second now a snap poll should appear on your screens. This is just to get your initial thoughts on how you found today's webinar. If you can just spare a few minutes, there will also be a short feedback form appearing in your browser when you do leave to the end of the webinar today. And we'd love to know what you enjoyed or valued and where we could make improvements to the session. So I'll just give you a couple of minutes to complete the snap poll, and then we'll move on to some signposting. Lovely. Thank you. So this slide just highlights some of the key resources that can support you after today's webinar on charity trading. So the links under help and guidance from ourselves cover the core concepts about what we've discussed today, including what counts as trading, the difference between primary purpose and non-primary purpose trading, and when a subsidiary may be needed. They're a really good sort of starting point, and they have literally just been updated thanks to Withers. So they really are as up to date as they can be. We've also signposted to some key external guidance that many charities rely on when making their decisions about trading. So that includes the Charity Commission guidance on trustees, trading and tax that Philip mentioned earlier, and the HMRC guidance on trading as well, which are essential reading if you're actively trading or planning to. We've also included two very practical guides from Sayer Vincent, Trading Issues Made Simple and Subsidiaries Made Simple. They're written in plain English and are really helpful for trustees and senior leaders kind of wanting to navigate some of the complexities. Under training and events, we have highlighted a session on building a sustainable and resilient fundraising strategy. Whilst that isn't focused on trading, it is really relevant if you're thinking about how to make your funding more sustainable and thinking about how trading may fit into that wider income mix and your longer term financial planning. And finally, I just wanted to remind you about our small charity help desk, which is available for any questions about setting up or running your webinar. You can email or call us Monday to Friday between 10 and 4. While we can't give you formal legal or tax advice, it can be a really useful place to go if you're looking for kind of signposting for resources or a first port of call. So whether you want practical guidance, structured training, or someone to talk through your situation with, there is support available for you. Just to finish up, I also want to highlight a couple of upcoming webinars that might be of interest to you or your colleagues. You can book your place through the QR code on the screen or by visiting our website. So the first session I want to share with you is how to raise a concern with the Charity Commission, which is taking place on the 17th of February, 10:30 till 12. It is via Zoom. And this is if you have any concerns about the operations or governance of a charity. We know that it can be difficult to know what to do next. So this webinar, delivered by us in partnership with the Charity Commission, will provide practical guidance on when, how, and why to raise concerns with the regulator. It's designed to support informed decision making, whether you're dealing with a current issue or simply want to be better prepared for the future. The session is aimed at trustees, senior leaders, charity employees, and anyone who wants to know the process for raising a concern. The second webinar is top tips for successful corporate fundraising, and it's on the 29th of April from 2 until 3:30. It's also via Zoom. We know that corporate support is an important area for charities, and data from the Charities Aid Foundation suggests that UK businesses contributed 4.2 billion worth of support to charities in 2024. And that support can go beyond funding, so it includes skills, employee time, and marketing reach. So in this session, you'll hear practical tips on delivering successful corporate fundraising from 2 small charity leaders with a strong track record, with insights on building mutually beneficial relationships and developing additional income streams. That one will be available on our website shortly, so please do keep an eye on our website for further details. But if either of those sessions sounds relevant, please do book on, and please do feel free to share the details with your colleagues as well. So that does bring us to the end of today's session. So just a few final things before we wrap up. Firstly, I just want to say a big thank you to our speakers for generously sharing their insights and experience. And of course, thank you to everyone else for joining us and contributing your thoughts and questions throughout the session. Before you go, we would really appreciate it if you could fill out the short Zoom survey that will pop up when the webinar ends. It does only take a minute, and it really helps us to improve future sessions. And finally, if you're not already a member of NCVO, I'd really encourage you to take a look. You can scan the QR code on the screen now, or you can visit our website to find out more. So thank you again so much for taking part in the session, and we hope to see you at one of our events or the webinars in the future.